So essentially, one of the solutions was to, I guess, encourage Americans to start saving instead of spending. And the reason why they propose that is because now they want to control or put a fixed amount on the CA account, where Americans start saving more, so that you would have a very balanced CA account. So do you think we're in a position to start saving? Because we've been spending for the last couple of decades, and all of a sudden we have to start saving and manufacturing in order to counter the deficit that you see in the current account. So I guess my question is, are Americans ready to start saving?
No. And actually today, you look at the data, the savings rate actually went down. So I think it went down to 5.5%. And it's pretty simple. There really isn't much money to save. And a lot of people actually have this savings because their house is worth a lot less than their mortgage, right? So a lot of if you look at the sort of household leverage and the decreases in that leverage that have occurred over the last year, it's really interesting because almost all of the decreased leverage has come from defaults. So you default on your mortgage, and basically, effectively, you're reducing your leverage. And only a minuscule amount has come from increased savings. So basically, the way I look at it is there's not really a lot of ability to actually save right now because people are scrambling. If you've got some money and you're worried about the future of your job, then you are saving. The other issue is if you're saving, what are you going to do with the money? You going to put it in the stock market? Pretty risky right now. You going to buy bonds? Well, even if you live off the interest, it's a trivial interest right now. So CDs are, less than 1%. So there isn't a lot of incentive to save. So do I think that just, increasing our savings is going to solve our problems? It's more complicated than that. I do think that the American consumer has had too much leverage, and the government also too much leverage. Corporations, no. So corporate balance sheets are in very good shape. U.S. corporations sitting on $1.8 trillion of cash. So even if you look at the average debt to equity ratio or debt to assets, it's very misleading because usually the way that's reported is that it doesn't take the cash into account. So you have to adjust that for the amount of cash out there, and the amount of leverage in terms of corporations is pretty low. So corporations in good shape, government in terrible shape. Consumers are in better shape because, basically we've seen over $1 trillion of defaults, and we're going to see probably another 1.5 trillion in defaults. So the leverage will be reduced only after the leverage is reduced by basically default. And we get our financial system operating again. We get the economy growing at a good rate, which means over 3.5%. Only then is it, I think, credible to talk about increased savings. And yes, I actually think that it is a good thing to have a savings rate that's greater than 5%. Okay? I think that we were in this period. Think about this. Economists called this the Great Moderation, the period before 2007. Because we had severe recessions in the early 80s, the so-called double dip. Then we had a very mild recession in 91, 92, lasted only 3 quarters, very mild. And then we had another mild recession in 2001, and that lasted 3 quarters. And extraordinarily, there was never, even during the recession, a year-over-year negative real growth rate in GDP. We had like 2 quarters that were negative, but year-over-year, it was never negative. Okay, so given the lack of economic volatility, people think, along with the housing prices going up, that this is just going to continue. So I can draw my savings down because I'm going to be much better off in the future. I don't need to save. Well, I think that basically people have realized that it's not going to be the same. That we actually face real macroeconomic risks that they hadn't realized, they've forgotten. So I think that naturally what will occur, we're seeing deleveraging right now in terms of consumers. Once we get some economic growth, I do think that people will increase their savings rate, and that will provide a buffer for the next recession, which we know will happen, just a question of when. Okay. The other thing is that the government, it's in their best interest to encourage the savings because they need somebody to finance the deficit. So who's going to buy the bonds? Okay, well, I guess the Federal Reserve is buying some of them, but you know, and China is buying some, but you actually need your citizens to buy if you're going to run deficits like this. Now, of course, I'm not advocating continual deficits. I'm more of the camp that we need to slash government spending at this point. But I can imagine, you know, government advertising saying you need to save so that you're not in the soup line in the next recession, something like that. So I do think that we will see increased savings rates.